On today's episode, we are going to take a look at Southwest Airlines. They just reported earnings today, so let's get started. The first thing we want to do is take a look at this company's stock price performance, and compared to the high in February, this company is still down about 50% compared to where it's at just a few months ago. This company today ended the day at $29.69, which was up about 2% for the day. So in today's episode, we're going to take a look at some of the articles that come in and some of the earnings updates that we see about Southwest. And like always, guys, don't forget to hit the thumbs up, subscribe, and hit the bell. It helps out the small channel out so much, and I appreciate all the feedback I'm getting from you guys. And post on the comment, are you guys looking at any airline companies right now, or are you guys stepping away from these airline companies at the moment? All right, so next, let's take a look at Southwest results for earnings per share. So for quarter one, non-GAAP earnings per share, there was a loss of 15 cents, which was actually a beat by 12 cents. GAAP earnings per share were negative 18 cents, which was a beat by 11 cents. Revenue was $4.23 billion, and that's down 18% compared to same time last year, and it missed by $320 million. The first thing I want to say is this company actually it seems like this company did not lose as much money as was expected by the analysts. And right now, this company's revenue is only down 18%. But remember, guys, it's not the full quarter that happened that was affected by the whole shutdown. The shutdowns pretty much started in mid-March in the United States. And one thing about Southwest Airlines is over 90% of this company's travel is domestic travel. So they really didn't take effect until United States actually shut down. All right, so next I actually want to take a look at this company's asset distribution and liability distribution from their most recent 10K report, and that 10Q report, and that was actually the last quarter, because even though they just reported earnings, they have yet to put this file into the SEC website. So I still wanted to take a look at past data. And I've done an episode on airlines, done plenty of them, and Southwest and Delta are my favorite out of them all because they have such a strong balance sheet. Southwest actually, I think, has one of the, if not the strongest balance sheet ever. So right, this is based on December of 2019. And let's just take a look at the major debt that this company has. First, let's take a look at non-current debt. Non-current debt for this company is about $2.8 billion. Current debt is $1.17 billion. So that gives you a total of about $4 billion, probably $4 billion of debt. Now let's take a look at this company's asset. And here I'm just taking a look at cash and cash equivalents and current investments. Cash and cash equivalents have $2.5 billion and current investments has 1.5. So again, about $4 billion. So for both, and this is just on things that can be liquidized pretty quickly. So just those two assets alone can actually cover this company's total non-current debt and current debt. Obviously, there's other liabilities that this company has, but no other, I know this, no other airline has a balance sheet like this. Most of them are pretty leveraged, and Southwest actually is the least leveraged of them all. And that's one of the major reasons why this company has not dropped as big as the other companies, right? I said Southwest compared to February is down 50%. But let's take a look at one that has a very weak balance sheet, and that's United Airlines. Even with the huge update today, let's take a look at a peak in January. This company is down close to 70%. Let's take a look in February, same timeline, over 66%. So you can see how investors can already tell or have some form of understanding of which of these airlines are going to or have the best chance of survivals, and those are the ones that usually take the smallest hit. Unfortunately, when that happens and good news happens, the companies that dropped a lot more usually come up a lot more in percentage wise, right? So we can see United Airlines today increased about 11. But if we take a look at Southwest only increased by 2%, even though it was more of a global news around airlines today. And it was one of the big news we're going to talk about is just the reopening of Florida, which is a huge touristy spot for most of these companies. So, and this is where a lot of travel goes to. So a lot of airlines actually came to have big updates. But remember, even with an 11% down day for United Airlines, is still 66% down compared to Southwest, which is only down a little bit less than 50%. All right, so now let's take a look at some of the articles that came out today for this company. All right, so in this article, we're actually talking about both Southwest and Boeing. Southwest is actually one of the biggest customers from Boeing for the 737 MAX, but because of the 737 MAX at the moment being grounded, they have moved some of the deliveries later on. So this is gonna help Southwest save money, right? Because they're not gonna have to pay up front for these planes that were supposed to be delivered and just gonna be parked. But one good thing for Boeing and Southwest, Boeing still says that they're still gonna continue to work with Boeing. They're not planning on doing any major changes at the moment. Right now, the only big change that they have done is move the delivery of schedules. This next article pretty much talks about the current demand of air travel. So Southwest predicts no material improvement in the air travel trends this spring. They're saying they expect a 95% decline in revenue in May alone. So May is going to be pretty much zero revenue for this company. And just right now, this month alone, April, is probably going to be similar levels to May, right? Because the lockdown has still happened, and I would say April was one of the few months that experienced, right? Because previously was March, and March shutdown only happened during the mid of March, so the previous quarter did not see a big impact. But April is most likely going to see similar levels to what May is going to see. Let's take a quick look at liquidity and just why this company is doing pretty good. The airline raised $6.8 billion in liquidity through debt and government assistance throughout the CARES Act. Kelly, which is their CEO, said that the airplane plans to cut spending by over $6 billion in 2020 and that it expects to burn $30 million per day in April. And $30 million per day is actually not that bad compared to these other companies. I actually just took a look at Delta, I think last week. Delta reported earnings last week, and they said right now they're burning $100 million per day, and they're expecting to burn $50 million by June. So this company is definitely burning a lot less cash, and one of the main reasons is just because they have such a great balance sheet, not as much debt as all the other companies, so this helps out a lot. Total, the airline has about $9 billion in liquidity. So in theory, let's just do a quick calculation in math. So about 300 days. So that would give me 300 days that this company can actually survive with its cash, and that's pretty much a whole year. Next, Southwest CEO does mention that they are seeing some decent bookings in place for July, but at the moment they have no idea to see if those are eventually going to be canceled. Because right now, if you guys have tried to book a trip, in most airlines, if you book now and you even cancel within the next X amount of months, you can actually get all your money back. So a lot of people are probably just booking right now and just seeing how things are going. If things are not as good, then they're going to cancel. So they're not really trying to give hope. All right, so now we're going to see one of the major reasons these companies, all the airlines are up pretty big today. And it's pretty much that there were talks about Florida reopening. And when Florida means reopening, it means letting tourists back into the state. And tourism is one of the biggest monies for the airports, the cruise lines, the airplanes, the theme parks in Florida. Florida drives from tourism. Right now, the state says that it has testing capacity that exceeds the current demands. So that's actually pretty good. So now if they have that much testing, they can probably start letting a little more people in and then into Florida, and again can help out. So that's why some of these major airlines are up over 8-9%. Next, we're going to take a look at just a quick article from Jetblue. Jetblue is now going to require customers to wear masks, and I think this is going to become a new normal that other airlines are also going to do it. I don't understand why other airlines are not doing this. It's something so simple, and I just can't wrap my head around it. Right now, 3 other airlines, United Airlines, Delta, and American Airlines, have said that they're going to start making their employees wear masks. But I mean, if I was a customer, I would prefer if everybody was wearing a mask, even myself and everybody else around me was wearing a mask. And I think this is going to help out. This is one of the best ways to end up re-grabbing your customers, because right now it seems like everybody there's no real customers for air travel. So JetBlue, by being the first one, I think is actually going to get a lot more customers. And if those customers like that experience, they're going to keep JetBlue just because they're going to feel safe. And I think customers need to feel safe to start re-entering the air travel. All right, so now let's take a look at this company's earnings per share estimates for December 2021. So if you guys have watched my channel, one of my favorite things to do is take a look at forward PE ratios for companies 2 years ahead. And this is one of the major ways that I value a company after if I enjoy everything else about the company. So for December of 2021, this company is expected to make $3.46. This gives the company currently a forward PE ratio of 8.2. 8.42 forward PE ratio seems to be pretty cheap. But one thing I wanted to take a look at was this company's historical PE ratio. And we're here in lazyfa.com, and in theory, this company usually has a forward PE ratio which seems to be somewhere in the mid-low teens, so around 12.12, I want to say. So sitting at this company expecting to make $3.46 times 12 gives this company a stock price of $41.52. So we're pretty off from that right now. We're at $29. So there's easily about a 30% gain that can be seen if we go back to historical forward PE ratios. One thing I am pretty, if I had to pick one airline, I think Southwest would be that airline, just because of that huge balance sheet strength that this company has. It's only, it's crazy that I have to say this, but it's only burning $30 million in cash, when the second airline, who has the other second best balance sheet, is burning about close to $100 million in cash a day. So this shows how strong Southwest is. And again, the dilution and air travel, for me, this is just my opinion, right? Air travel for me is going to come back. I'm not gonna want to drive my way to Florida or anywhere else. Once I feel a safe customer again, I'm going back to air travel. And I'm pretty sure there's other people around me that feel the same way. So let me know what you guys thought of today's episode. Today is a pretty busy day. I'm off to go do my next video. My next video is gonna be AMD. So hope you guys take a look at that video, subscribe, thumbs up, and let me know what you guys think. Take care.